following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And we are going to get right into it here with the euro. Talked about my reservations continuously by being long the euro, but I think he got a little bit of a stake in the ground here finally. I think so. Listen to Larry's shows I do every day, and he was talking about possibly a decent support area on the euro, similar to what I was speaking about past couple of days, 105, 85, 86. I think we reached a low of, let me see if I can see this here. Got on my Rochester Medicine shirt today. Promised somebody I'd wear it. Cool town, by the way. Never really been up there till I was forced to go up there and really enjoyed the place. Didn't know the history of that place until got up there. Nice town. City. 105. We reached a low of 105.91. Unfair lows are 105.86. So that was kind of the place to play defense here on this. And I still think you got a lot of chances for this to climb higher. And remember, the targets we talked about on this trade initially are 106.93. So you got a great risk-reward scenario here. Talked about a DMZ down here, maybe even putting stops below this 105.60 area. But the big weekly, remember, takes precedence over everything else. So I was happy to hear that Larry was actually excited. I don't know about excited, might not be the right word, but validating that it was okay for a possible bounce. Hope you guys are doing good in the den this morning. So that's something we can talk about, because if we roll over to the S&Ps, we're going to look at the just incredible rally here. Here's the daily, and this is definitely on the future side incorporating today's price. My puts are pretty much flailing in the wind now. But I'm glad I didn't go short the S&Ps. Here we go. So here's the 240. So even this morning, coming off, we found support. This is the, can't believe I'm saying this, 2323 now is support on the S&Ps on the 240. So we talked about, let somebody else figure out the high print, and that's kind of been the rhetoric since our most recent breakout on the S&Ps. Can you imagine? I mean, it was the night that we had the election. I think we got sub 2,000. Now we're up over 300 points since then. So what is that in percentages? Let me divide 300 by 2,000 really quick. That's nuts, isn't it? Is that 15%? It is 15%. We've had a 15% move since, where's November? Well, back in here sometime. This is the 240s. Let me pull up the daily. Let me digress totally. There it is. There's the lottery ticket. Actually got down to about 2,000. So 15% move, man, from the bottom. Wow. Incredible. All right. So, these types of moves, I was kind of reading some comments in the den while we were talking here. These types of moves usually will have some decent snapback actions. But, if we just kind of, do these rallies and spin around, those are continuation patterns classically. You probably know that by now. The 240s need to get broken to even start thinking about having any type of short activities. I've been talking about, let somebody else figure out the high print, keep the powder dry. A lot of people, a lot of day traders are trying to step into this, and they have to cover, especially by the end of the day. and that just kind of causes this thing by default to just, it's kind of like the Tesla type thing on the day trading basis as far as people being short. So that's the drill there. Nothing new to talk about, to be honest with you. Got some Janet Yellen comments today, and the president, of course, of did you see the way the CNN was capturing the photos of Trudeau speaking to Trump? They snapped it right when the guy was looking at Trump's hand and not shaking his hand. I mean, if you actually look at it with, full video and the continuation of, hey, Trump holds out his hand and, he shakes his hand. They snapped it as if he didn't want to shake his hand. It's just amazing what the media will spin. Either way, I mean, Republican type media or Democrat type media. I didn't never see this in my lifetime, getting this divided. Remember when, excluding Dan Rather, of course, you remember when the nightly news, they just told the facts. I mean, as far as they got them and they did a little research to make sure they were right. And now they take information and kind of embellish it. Either way, it's just amazing. It's awful. Apple. You guys know all this, though. All right, so thank God I haven't shorted this. And that was the main reason back in there. We've talked about this a lot. So have I personally missed the boat on this? I will admit yes. And, the good news is for me that I hadn't given me any reasons to short it. But, what do you do with Apple now? Market's made an incredible move. Apple has been obviously one of the reasons and the leader. Trump could come in with the administration and talk about some more features involving bringing money back onshore. So, this thing doesn't have to be too high. I mean, it could get another on steroids kick up. I mean, I'm talking a repricing based on people just simply doing the math. Forget the valuation right now. Just simply doing the math of what that would mean for the company itself, cash available, putting money to work onshore, blah, 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 all that stuff. So this thing doesn't have to be too high, folks. Let some technical damage happen before you even start thinking about shorting something like this. And it's literally too high for me to say pile into the longs here. So I'm trying not to look at it. All right, so taking a look at crude. I don't see any Valentine's Day crude rally here, so we're just kind of sitting on the launching pad. Stops below 52.32 as usual on that. Gold. Gold, we're going to take a look at. This is kind of interesting to me. I've not been a fan of getting short gold, and I want to talk about this a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Yeah, it's amazing what the news has come to. Okay, gold. Talked yesterday about not shorting this. All right, and talked about that actually last week, and how the dollar coming off may just kind of put this thing on steroids again, and the possibility of that. So we talked yesterday about the buy point was around 12.18, 12.19 rounded off. I think we hit a low of 12.20. So talked about being patient after, we kind of crossed back down below the border of our weekly, getting back into the weekly fair auction. Just, talked about, okay, let's just, might want to wait until we, figure this part out. And I talked about my feelings that, gold was probably not a short. Against that, that was target rich on the long side, that 12.36 rounded off. So we talked about yesterday, or the day before, let's just wait until we get some areas to pick a battle. That was a nice little deal right there. And now we're back up to that weekly and for high. Still not a fan of shorting this. So I hope we provided some decent information on gold here. And you're probably saying, well, what do you do now? Now that bounce trade's over. You should be taking some off at these weekly and for highs. And now you just got to sit tight. You got to see where this thing wants to go, because the traders will figure this out. The bids and the offers, it doesn't have to be. That's one thing was really hard for me to understand when I first started this endeavor of trading. I'm not going to outthink this thing. So the market, the price of it's where it is, because that's where everybody's decided it should be, not you. So taking a look at this is a wait and see on gold now. You got a decent little bounce of about $15 an ounce, and that's what the market can give you right now. That's it. You got to sit tight. If you want to leave some longs on, that's okay, but don't leave the whole shebang on. Dollar. All right, so looking a little concerned here for shorts, but I'm still not convinced this is long. So this is kind of like, I'm out of this trade right now. I want to see this thing have a daily close back below 165 on the dollar. I'm kind of completely in Tom's camp right now. I think we could easily revisit 99.5 and lower, and that would be I think gold's kind of almost portending that a little bit right now. CSI 300, talked about staying away from this on the short side around that POC. This has been, I think, one of the more easier trades once we reverse back up here. And I'm fully believing that 35.21 is in order here on the CSI 300. If you guys are looking at trading some China ETFs, by all means, I think Tom advertises the CHAU and CHAD. Take a look at those. 30-year. Talked about staying away from this. I still think this is a crapshoot either way. This is the daily. This is the weekly. You got, there's kind of meeting that range target on the 30-year. Just still, bleh. No way to get an edge there, in my opinion. Let's take a look at copper really quick. Saw some guys making some comments in the den about this, fundamentally speaking. We had talked about, trying to trade this from the long side at that 2.49, and now we've got a weekly close last week above 2.7530. Now you've got a chance to play defense on this. This thing could go a lot higher, guys. That weekly close is a big deal, and if it holds its pattern up here, the good news is you can play defense below 275, but would love to see this thing spin around up here above that weekly unfair high and prepare to launch again. So we talked about the bean trade kind of being over here at 1065, 1064 and a half, whatever. And that's kind of been the case. I would love to, this is what I'd love to see on beans. I would love to see a new profile output here and be kind of that inside day type inside profile on the weekly. Excuse me, this is, let me get the, make sure we got the right time frame up here. Okay, yeah, that was the weekly, excuse me. Here's the daily on March beans. So getting a little bit of support situation on 1046, 1047, but I don't even know if that's going to hold. I mean, I think we've had some decent trading opportunities on this lately. I think you got to sit tight on beans right now. I got to check this. Our Kansas City trade lurched even farther north yesterday on the Kansas City wheat situation, and I still think this is something that could probably get back to $5 easily. So how do you trade this? Here's the 240s on that Kansas City trade. I mean, you got support at 460, 461 now, trading about 465. Sorry, guys. Right. And you see how Amazon's getting into something else? It's actually in my space now. It says Amazon Web Services is, I'm sure David might talk about this today. Amazon Web Services is taking on Skype, WebEx, GoToMeeting, and video conferencing, pushing deeper into the productivity application market to broaden its appeal to business customers. AWS's new service called Chime lets users host video meetings and share content on computer and mobile screens. It's available on Windows, Mac, blah, blah, blah. So they're going to do it right. We're actually working on, in the software company, a piece called Kenja, Kenja, and this is concerning. That space is getting kind of crowded. But the thing is David was telling me this one day, which I fully am on board with and believe. It's these larger companies, just when they move into something, it's just a murder scene for smaller companies, period. Let's take a look at a couple other things that are in the news here. Where was the thing I was going to say here? Chief executives of some of America's largest retailers, Target, Best Buy, Gap, AutoZone, blah, 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 will head to Washington tomorrow to make their case that an important tax would raise consumer prices and hurt their businesses. Best Buy has even circulated a flyer to lawmakers, which cites an analyst forecast that a 20% tax would wipe out the company's projected annual net income of $1 billion and turn it into a $2 billion loss. Trump could do anything here. It's kind of weird how it's almost like Genghis Khan, like the local warlord has to bring a chest of gold to the meeting. I keep thinking about these weird things whenever I see these Trump meetings. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Good to be back. Let's take a look at Amazon while we're talking about Amazon. Company that seems to be sticking their head in all kinds of areas here. Here's the incredibly awful news that the market gave you a free bid in down here, 808, 809. nobody even batted an eye at this. It was just, thank God they gave us a lower price to get into this particular stock. That's the way the market looked at it. Here's the daily. So we are just sitting here. I know we've been here before. Here, there. I wouldn't look at this as any kind of quadruple top, blah, 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 classical technical analysis situation. And I know Amazon hasn't made new highs with the market making new highs, but I mean, the only kind of hopeful, wishful thinking on this for shorts is Trump has a personal vendetta against Jeff Bezos. You guys know this. He owns the Washington Post. You don't know what's going to happen on that type of situation with Trump having a personal vendetta against somebody who owns a company like this. I mean, he could come out and, we're talking about changing some tax situations and meetings with retailers who have brick and mortar stores, things like that. I mean, there could be a news flash that comes out, and we've talked about this before, that, hey, wow, we're going to put an extra 1% tax on top of all online retailers just to help the little guy or whatever. And then this thing could probably come apart at the seams for just a little while, because their whole structure is based on, like somebody mentioned in the den, Walmart, just super mega low margins. And if you look at some of their statistics, I mean, it's getting better, but they've got everything kind of pegged into super low margins, and anything like that comes out of his mouth could stock could get cut in half. So it's something, a lot of these people that are so smart that come on TV and got the tie and the white shoes. Oh, I'm just going to buy Amazon on dips all the time. Got to watch out for something like that happens. So I'm not too interested in that one. He could do it. Yeah, and there's also some monopoly talks there. So, you got the president and the power of the federal government against the company possibly coming up. Who knows? American Express talked about this one yesterday. Just a financial stock that is the strong of the strong. Love this thing. Let's take a look at this one. Yeah. Do not discount the power of the government. That's a true statement. Tesla, okay. Talked about my buddy down in Florida who was short AOL through 2 or 3 splits. God bless him. Tesla now trading, what is this? What pre-market here? 280. All right. So we talked about there was 0 reasons technically. Again, talking about letting somebody else figure out the high print on this type of stuff to stand in the way of this stock. It doesn't have to be too high. Yesterday kind of really put that on steroids, that comment. Let's take a look at the 240s here. So that little yellow bar, if you look at the scanner, if you've got the scanner, I haven't been showing the scanner lately because I've got a beta version up that has a little bit of an issue that I hope we're going to clear up today so I can start showing that again, because I don't want to show the old one. This is a situation, if you've got the scanner right now, you do have a hint of a new profile attempting to appear, which we don't know where it's going to be, but just that fact alone on the short term may give you some reasons to look at taking some off the table here. All right. The market has made an incredible run for the past couple of days. And, but, on the long term and the intermediate term, there's just like no indications whatsoever of that right now. We had that right there. And then, it was either buy support at 237 or wait for breakouts again above 256. So you never can tell what's going to happen when these type of actions happen. A lot of times these fair auctions are explored, not on Tesla though. My God. So, you're on the intermediate, there's really not a lot of reasons to take anything off right now, but on the 240s, you've got, depending on what kind of time frame you're looking at this stock. 3M. This is something that we were looking at one point because, we had some lid here, not the weakest stock in the world by any means, but I was looking for a lot lower price on this, and obviously the market rallying like it has kind of destroyed that concept. 178.10 stops above. I just wanted to revisit that because that's a no trade right now. Getting back above those weekly unfair highs on the short side, of course. That's why you play the field, though. Big Mo. Been a pretty big fan of this stock, and it, kind of showed itself earlier, breaking above 66.8. These are huge moves for just companies that just massive market capitalization. You do have, though, on the daily, I just want to point this out, that bar locked in yellow in the scanner, it's going to show that peel back, and that means it is time to take some off the table off Big Mo, and I wouldn't mind taking everything off the table in this stock right now. Even though the weeklies are looking like they're looking, that daily is going to come out today right as the market opens, and I think it's time to just kind of sit tight on Big Mo. A couple other bellwethers. General Electric. All right, so one that's just not been participating lately, and if you're holding this in your portfolio, or your portfolio manager's holding it, they got a lot of international exposure. There's a lot of currency fluctuations that can affect this particular stock. Here's where we're at. We talked about waiting until we got back up into this 30-25 area. We're pretty much there. If you're looking for a short on a short-term basis, this might not be a bad scene because it is, it obviously empathetically kind of rallied with the market lately, but you got, I think, a stock holding its hand up saying, I'm at a battle point. It's okay to short me. International paper, we've talked about that. I'm sorry. I didn't mean to bring that up. Let's take a look at Trump's favorite mechanism here, Twitter. Where does this thing go? I mean, I haven't been listening to Tom about this stock. I don't know if he's brought it up much, but I think we're going to go sub 13 on this. You got a chance to play stop still above 17.18, so you still have a decent risk reward there. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back. Trying to get the currency server back up here. Wanted to look at the yen trade here. So another reason why I think the dollar and the yen could just now revisit some lower numbers, kind of reach these daily infra highs and starting to trail off again here. So going back to the dollar, just wanted to kind of restate what's going on here. I'd love to see this thing cross the 165 border. We're kind of using that as support right now, but I would love to see that happen. Then I'd love to see that revisit to some 99.5s. So watch out for the yen long. I don't think that's the rosiest situation right now, even though you caught a really good 300 pip bounce off that 111.67. Let's hit the I'm sorry, the British pound. So this is the drill here. I actually, this is a little concerning to not short this. I think, you got to be looking at buying breakouts above 125.39 now on the British pound. Here's the daily. I think we got decent support. Getting through those weeklies and having a weekly close above there would be really, really cool for longs. That's also looking at the dollar with a little bit of jaded eyes. Here's the Aussie dollar. I've really wanted to look at this from the long side now. Talked about, again, trying to trade breakouts above 76.96. Let's call it 77. Still think this thing can go much higher. I think 80 is a good target on this one. Sorry, get the right thing up here. Let's take a look at Teva. Had some, dang it, TEVA. There we go. All right, some decent news. Here's the week trading 33.68 looks like, but even with decent news, you've got 35.53 standing in the way on this one. You really, to start looking at this from the long side, you'd really need to cross back up above that and have a weekly close above 35.53. So stock that hasn't really participated at all lately. But I think once if we cross back up into 35.53, then you got some decent reasons to trade this almost all the way back up into 42.21. But right now, still not doing any anything technically that I'd like to see. So this is a really good lesson using profiles. That is a very, very powerful move if we can get back into the fair auction. It's not happened yet, so nothing happening on this. So it's not time yet to pile into it. This thing could easily come down again. Okay, what month would you like to look at cocoa? Okay, well, on cocoa the month, I'd love to. Yeah, we'll look at it. Coca-Cola, we talked about just something not right here, and this 40.51 could be broken. And look at what the market's doing. This thing's not on sale, and I would dare say that this thing rallying right now. Okay, let's stay on Coke for a second here. Weekly unfair lows, just to point some figures out here, 40.51. All right, the market's made a huge move up. We're trading 40.52 pre-market. We've talked about using everything under the sun to try to short this thing when it's been available, and trading this breakout below 40.51, I think, is going to be like shooting fish in a barrel. Any type of market pullback, you should see that happening. There's a lot of things wrong in the Coke camp right now. See if I can get this up. Cocoa May futures. Somebody's asking me to look at this. Woo. I hadn't looked at. Woo. This is the weekly on the May futures here. What in the heck happened? Okay, so here's the daily. My goodness, why have we never looked at this? Has Larry been looking at this? Ooh. All right. So what do you do with this now? So there is some good news to try to nibble here. I'm looking at this navigator here. When we have these, lower lows and then navigators making lower lows, we've got a higher low here. So that's one thing that may start looking somewhat attractive here for this. But that being said, you have to look at these things in conjunction with each other, and you don't have any new profile down here in conjunction with this type of divergence. And this is, again, a long-term, not a great timing tool, but just giving you some hints that, next time a profile comes out, and this is in our scanner also, next time a profile comes out, it might not be a bad idea to look at this as some kind of contra trade against this trend down, and then you actually may have a reversal start to happen if we can start breaking above profiles. But I would, if we get a new profile happening here, which is, there's no indication of that yet, so there's no real reason to look at this from the long side at all, and it hasn't really given you any indication to play the other side of that trade. Then we could start looking at trading against those unfair lows on the profile, just to at least explore the rest of the fair auction up top, if that makes sense. I'm not a cocoa trader. All right, we looked at IBM the other day. I just want to keep pointing out that stocks like this, when you have a profile appearing below price action, it's a great long opportunity. You just got to look at it that way. So when we had this profile appear below price action here, it's a bullish feature. Just in everyday trading opportunities relative to profiles. But right now, what do you do with IBM? There's zero reasons to short it, just like there's been zero reasons to short the S&Ps lately. All right, so going back into the S&P futures, we're just going to hit this really quick, just do a little bit of review for people who missed the beginning of the show. So here's the 240s. This is all you got to hang on to right now. any type of breaks below 23.22, you could see somewhat of a pullback, but the long-term, weekly, daily, just nothing doing here. Don't stand in the way of a train. Gold, really looking for this to bust through 1235, 1236. We had a really good trade yesterday. We talked about coming down into this 1218, 19. I think we can easily see above 1236 on gold. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So we're going to look at a couple of retailers here, brick and mortar stuff. GPS, still massive headwinds for this type of business concept. 2457 caught that on Friday. Just on stocks like this, anytime you get a chance to look at resistance on these brick and mortar stores, I mean, you just got to look at them as trading opportunities on the short side. They are by no means participating in this rally here. There's Gap stores, and what do you do with it now? I think you still short it. We talked about Bed Bath & Beyond. I think we talked about this, just putting a short on and putting it in your grandkids' college fund. 40.66. I mean, again, this is the daily. Anytime you get a chance to look at some of these inflection points to lean against on the short side, you just got to do it. I think 39.44 and a lot lower is still in order here. TGT. All right, so this is kind of that same action that we were talking about on a stock we looked at earlier. It's just getting back, and I think that was Teva, is waiting until we got back into the fair auction, and then you might get some higher exploration type price action, and then you can play defense a little bit on that contra trade. So, what do you do with Target now? Obviously, they're in the Oval Office tomorrow paying homage to Trump. Probably begging would be a better word. So you got some serious situations here on Target for a bounce still. I mean, I know we bounced already last week, but you got weekly unfair lows at 64.44, and you've got daily unfair lows at 64.40. So even though I hate this sector, things don't go in a straight line. I actually think you could get a little bit of a bounce here. So 67.45 would be a decent target on this. I know that's not ringing a lot out of the marketplace, but you might have a little bit of a bounce here on Target. Just a sympathy talk with Trump there. The guy that never sleeps. Market loves it. And well, we'll talk about his golf courses tomorrow. I was thinking he was going to have a complete meltdown on everything if he didn't. That was a pretty risky trade. If he didn't become president, the empire was probably going to take a little bit of a hit there. All right, Home Depot. Talked about this one. Still like this trade a lot, and I like how it pulled back to 138.89 yesterday and just kind of bounced right off of it. It's giving you a decent little trading opportunity. Still like this. We're going to take a look at JCPenney. This is a kind of a similar situation as far as retailers. I mean, I don't know what the short interest on is in this stock, but again, every time you've been given a chance to short it as it rallies up into any type of inflection points here, not a bad trade. But I think initial targets on this one now are 663. All right, guys, stay tuned for Larry. He's next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.